Hello, everyone, and thank you again for joining us here on the Crypto Weather channel. We have an exciting new development to show you here in the charts. It's codenamed the Cumulus triangles. And the way you draw the cumulus triangles here, highlighted here in this turquoise color, there is an upper, or excuse me, rather a lower and an upper cumulus triangle, which extends a little bit further up. All right. And so the way you draw these is the lower cumulus triangle. We're going to start at the start of the bull market. So the category 1 price line and date. All right. And we're going to draw a vertical line straight down to the market cycle low, which was somewhere in here. Okay. And then we're going to draw a line of equal price distance in the opposite direction to the upside. All right. And then we're going to connect both of those lines to the future halving price and date. And that is your lower cumulus triangle. The upper cumulus triangle, we're going to do the same thing, except instead of drawing those lines from the category 1 price line, we're going to draw it from the future halving price line. We're going to go straight down to the market cycle low, and then we're going to do one in the opposite direction, equal price range, and connect both of those to the future halving price and date. All right, so there we have our upper cumulus triangle and our lower cumulus triangle. All right, so once we kick off the market cycle with a bull market, we've noticed that these cumulus triangles can be drawn, right, to give us a price range of where Bitcoin is going to trade through up until the future halving price. All right, and so we either trade within the upper or the lower cumulus triangle, or we trade within the upper cumulus triangle. And we usually, on average, we usually trade towards the upper boundary of one of these two triangles. All right. There's a few occasions where we kind of traded along the bottom. All right, but we normally trade up towards the upper portion of either one of these triangles, and I'll show you that here. So let's go back to the previous bull market. We drew our cumulus triangles there the same way we did on this current market cycle's bull market. All right, and as you can see, we traded up to the upper cumulus triangle. All right, so we ended up following that path up until the halving. All right, and then of course we had that pandemic bear market in there, that black swan event. So, but for the most part, we traded within the upper triangle. All right. So our other option would have been to trade here in the lower triangle. So the bull market before that was also the lower triangle. All right, as you can see here, majority of the time we traded within that lower triangle up until the future halving. In the bull market before that, our first actually this was our second bull market of that cycle. Traded in the lower Cumulus triangle up until the halving. And so we've noticed in our research of these triangles that the determining factor of whether we trade in the upper triangle or the lower triangle is the Federal Reserve's federal funds rate. Right? We don't like to get too much into external economic factors on this channel, but it was pretty obvious that since we're trading, we're looking at BTC versus USD, you have to look at some of those external economic factors affecting the US dollar as well. So we found that whenever interest rates are low or falling, we usually trade up into the upper triangle, kind of like what we did here in 2019. The Federal Reserve paused rates, and then they started dropping them into 2019 and 2020. So we, had a more liquid environment there. U.S. dollars being able to flow into Bitcoin, and so we traded up in this upper price range here until obviously the pandemic happened. All right, so. All right, and then here, this was 2015. This was a high interest rate or rising interest rate environment here. So we traded in the lower triangle. And then the market cycle before that, this was our first market cycle. So this market cycle, this was a low interest rate environment. However, we had already made our way up and past the future halving price. All right, and then we came back down into a little mini bull market there. And by the time we reached a new bull market, we were already up close to where as you can remember from our previous video, the halving high pressure zone was located, right? So it was somewhere in here, right? And so, as you can remember, we drew the halving high pressure zone, just for illustrative purposes. Theoretically, the halving high pressure zone is always expanding and contracting, so it could be out here, right, like this. And it's not a perfect arc either. It changes, shape and size with the effects of external economic factors. So, although we had low interest rates here, we had already, um, did our thing as far as going up towards the future halving price, right? And by the time we, consolidated and made our way back up into a new bull market, we were already feeling the effects of the that maximum pressure of high the halving high pressure zone. All right, so we just wrote it out there along the future halving price into the halving event. All right. And so in this current, in our current environment, our current climate, we have rising interest rates. As of the recording of this video, the Federal Reserve decided to pause rates, I believe at 5.25%. So this is actually the highest interest rates have been in Bitcoin's history. So we're expecting, in line with our projections from May, that we won't go too much higher than the future halving price, because as you can see, the lower triangle just so happens to be almost parallel uh, with the future halving price, the upper portion of this lower triangle here. All right, and then we could also, kind of just ride along the bottom as well. That's always a possibility, but given the fact that this lower triangle is pretty in line with the jet stream as well, so we're just projecting that we're probably going to do something like this. Actually, I think it was a little bit further back. All right. I mean, it could obviously look a lot different than that because no price action is straight. Even if we do come up to the top and sort of stagnate there, there's going to be a lot of up and down price action, but it's really gonna, at the end of the day, it's gonna feel like we are just moving sideways if we do play out this particular scenario here. So we're excited to see how this is going to play out. If we stay in this lower triangle like we're predicting, or if we come up to the upper triangle and sort of bounce around there, or if we don't trade in either one of them at all. But as I said, this is what we're projecting here, all the way up until the next halving. So we'll keep you posted as the situation develops. And thanks for watching.